Hi folks, welcome to another episode of Who Said What. I'm your host Krishna, and for those of you who are new here, let me quickly set up some context for what this show is about. See, the idea is that I'll pick the most interesting and juiciest comments from business leaders, fund managers, and the likes and contextualize things around them. Now, some of these names might not be familiar, but trust me, they're influential people and what they say matters a lot because of their experience and background. So I'll make sure to bring a mix. Some names you'll know, some you will discover, and hopefully it will give you a wide and useful perspective. Now, for all the sources mentioned in this video, don't forget to check out our newsletter. The link is in the description below. With that out of the way, let me get started. So I was going through the con calls of three companies in the prefab space, EPAC, Pennar and Interarch, and something really stood out to me. Not just what they said, but the way they said it. There's a certain confidence and almost a sense that they all believe this industry is about to get much bigger than it currently is. Now, before we get into the quotes, let me quickly set the context. See, prefab or pre-engineered buildings is construction that behaves like manufacturing. Instead of building everything brick by brick at the site, the entire steel structure is designed first in software, cut precisely in factory, packed like a kit, and shipped on the location and then assembled. Think of it like Lego blocks but for buildings. Now each piece is made for a specific position and the site becomes the final assembly stage instead of the place where everything is created from scratch. We even covered this a while back on the Daily Brief. Now this is still early, of course. Prefab is a small slice of the India's construction market, but the con calls made it sound like the sector is entering a very interesting phase. And the quotes explain why. Let's start with EPAC first. Their CEO said,
We have disrupted the entire prefab industry by the speed of construction and by the speed of delivery.
Now the statement disrupted the entire industry is very bold, especially when the entire prefab market is still tiny.
The good part about prefab business is that at this time, prefab is only about 3 to 5% of the overall construction market, building construction market. So it means that, there's a tremendous potential. There is a tremendous potential for growth in this prefab segment, and we have only touched the tip of the iceberg.
EPAC's entire pitch is built around speed, and to be fair, speed is one of the area where prefab genuinely changes the game. Pennar, meanwhile, had two comments that together tell a very different story. The first one is surprisingly honest.
Our total shortfall was well in excess of 300 people, skilled manpower.
Now, this is not something companies usually admit so directly, and it reveals something very important. Prefab sounds automated, but it's still hugely dependent on skilled labor, whether it's welders, fitters, assembly specialists. Now, if you don't have enough of them, your timelines slip, your margins slip, everything slips. And then right after acknowledging this very real bottleneck, they say this.
From my side, I think what we can commit to is that a floor of 20% is what you can expect. That's what we have discussed at the board that we would want to communicate to our investors on a profit basis. We are quite confident that we'll be able to bring in sustainably over quarter on quarter for the next few years.
Now again, that's a bold statement. But they've backed it up by saying that they have resolved labor issues, capacity utilization above 70 to 75%, record US bookings in October, and an order book at multi-year highs. And then we get to Interarch, who, in my opinion, gave the most insightful definition of the entire industry. Their MD said,
"We are making a building into a product."
Now this is the cleanest articulation of prefab I have heard, because that's exactly the shift. From construction as a slow, site-led process dependent on weather and labor to construction as a manufactured product that you can design, version, optimize and assemble. But Interarch didn't stop there. They went one level up and tied this to India's broader macro trend.
India's steel consumption is still very, very low compared to what's happening in the world. We are maybe 1/3 of world consumption and 1/10 of what China has done. Therefore, we are going forward. We feel that the government pushed into manufacturing, into PLI schemes, into electronics, into data centers, into EVs and the renewables. All this push making India part of the supply chain, having more and more free trade pacts. This will only push India to set up industry and building faster and faster. And I think the pre-engineered building industry will play a very, very critical role going forward.
Now, this matters because the whole reason prefab is rising now and not 10 years ago is the nature of the projects India is building: EV factories, semiconductor facilities, logistic hubs, data centers. Now, these are not structures where you pour cement for 6 months and hope the monsoon doesn't disrupt. These are precision projects with deadline sequencing and global vendors. And steel first prefab fits that world far better. Interarch's point is simple: India is still under consuming steel. And as manufacturing grows, steel-based prefab becomes a logical choice. When you put all these quotes together, you get a surprisingly coherent narrative. EPAC says prefab is small today, but it's moving fast. Pennar says growth is real, but scaling is messy and people dependent. Interarch says that this is not just a trend, it's a structural shift in how India will build going forward. And the real story isn't that everything will go perfectly. It won't. But for the first time, the confidence isn't random. It's grounded in the fact that India is entering a phase where construction itself needs to behave more like manufacturing: predictable, modular, and fast. Now, prefab won't replace all construction, but it's going to take bigger and bigger bites out of the categories that matter. SBI's chairman in their recent con call said that SBI's gold loan business is cannibalizing their express credit business, the unsecured personal loan product. In simple words, customers who earlier took personal loans are now taking gold loans instead.
Currently, we expected this express credit to reach double digit. We were wishing for that. But the gold loans, I think some moment is there from express credit kind of customers. Unsecured personal loan is moving to secured gold loan because the amount of gold loan is higher now because of the value and the lower rate of interest, I think, contributing to that. As the gold prices moderate, we hope that express credit will grow.
So let me break this down. Let's understand what he actually meant, why it matters, whether it's happening across other big banks, and what it says about the way India borrows money today. Now see, for the past couple of quarters, SBI has been showing confidence in returning to double-digit growth for its express credit portfolio. They were attributing a slowdown to a deliberate technology revamp back in Feb 2025 and May 2025 con call. However, in the latest call, after this growth failed to materialize yet again, a new reason was provided, citing unexpected cannibalization from gold loans. Now, this was a material shift from a narrative of a planned and temporary slowdown to one of unforeseen internal product competition. SBI's own data screams the same story. While express credit grew at just around 3% from last year, personal gold loans grew at about 87%. Now we know the former has a much larger base, but this still warrants attention, especially after what the chairman himself said. And remember, this is SBI, India's largest lender. When SBI sneezes, the whole banking system feels the breeze. Which brings us to the more interesting question. Why are people suddenly replacing personal loans with gold loans? See, gold loans are cheaper than personal loans, sometimes by a lot. Personal loans are unsecured. That means the bank has zero collateral, so they must charge higher interest to compensate. But gold loans, they are fully secured. The bank holds your jewelry. If you are a middle-class borrower trying to save money, the choice is obvious, provided you have gold at your disposal. Which isn't a big assumption to make since Indians love gold. Not forgetting that gold prices have skyrocketed, so you get a bigger loan on the same jewelry. For many households, this is a blessing during a tight financial cycle. From a lender's perspective too, this isn't a bad deal either. Even though the gold loans yield them lower interest rates, it also costs them less to provide for them. Since these are secured, nobody wants to default on them, keeping the credit costs much lesser than unsecured loans. RBI's own data for FY25 to 26 shows that gold loans are one of the fastest growing personal loan categories at various points, while other personal loans are slowing sharply. Now this is where the story gets even more interesting. SBI is the only bank that presents gold loans separately in clean standalone line item, which is why their trend is glaringly obvious. But other giants, HDFC Bank, ICICI Bank, Kotak, don't really break gold loans separately in their investor presentations. That makes it difficult for us to confirm this, but they still give us a direction. HDFC Bank's management commentary gave us something. They said gold loans have been growing at 5 to 6% every quarter and yield pretty rich returns without the risk profile of unsecured loans.
Very quickly, in interest of time, I move to your query on gold loans. Yields have been good. Our experience as we are growing this book in a steady manner has thus far been very helpful. We do see us continuing on that path. We will be watchful as it is again a very emotional item with clients and who we deal with, and the clarity of the terms on which we deal with them, we will be cautious of. But yields on gold loan book have been, I would say, pretty rich, given that it is a fully collateralized exposure.
Is the yield here higher than your retail blended yield or at par? Just the retail portfolio?
Abhishek, it's going into one particular product rate. All I will tell you is that this is incremental to the bank's yield as well as the retail product yield.
And at the same time, they have been more cautious on unsecured PLs because of RBI stance. Put the pieces together and the direction is identical to SBI's, even if we can't qualify gold versus personal loans from the slides. Now ICICI is also cagey about breaking out gold loans separately. But here's the key data point from the deck. Personal loans have degrown 0.7% on a year-on-year basis, while everything else in retail is still growing. See, when your unsecured engine slows down to a halt while secured products like home loans, auto, etc. continue thriving, something has clearly shifted. So while we can't draw a perfect line like we can with SBI, the pattern matches the system level trend. Kotak is the most transparent about its strategy. Unsecured book is down to 9.2% of their loan book. They're gradually building back unsecured after slowing it, while the growth is mainly in secured business.
Our focus will now be to gradually build back our retail unsecured business. We have kept our cost growth in control despite continuing to spend on technology. Operating expenses were flat on a YOY basis. On a sequential basis, it showed a negative 3% growth.
Now this is the same behavior as SBI, the tilt towards secured. When you stitch all of these pieces together, the pattern is unmistakable. Different banks might have different reasons but still show one trend. So yes, gold is eating India's personal loan boom. And it's happening because everything lined up at once. Gold prices jumped, unsecured rates stayed high, RBI tightened rules, borrowers turned cautious, and banks turned to safer, capital-efficient retail growth. Gold loans became the perfect middle path. The real intrigue now is what happens next. Does this unwind if gold price is cool? Do borrowers return to personal loans once the regulatory pressure eases? Can households keep pledging gold forever? Do gold loans stay the safe choice if the economy tightens? Those answers will decide whether this is just a phase or the start of a whole new borrowing mindset in India. That's it for this episode. See you in the next one. But they backed it up by saying that they have resolved labor issues, capacity बोलना है. Steel-based prefab becomes the global, citing unexpected cannibalization. Gold is eating India's personal loan boom. Loan boom क्या बोल रहा हूँ?